Okay, man, I think we can start, and people will start pouring in, and so
Yeah.
thanks guys for joining. This is our second live webinar. The reason we decided to hold another one is, we did the first one a few weeks ago, and it was pretty success. People liked it and wanted to hear more about data and data-driven guys and traders. So we decided to have another one. We have now today Justin from San Diego. He's a very interesting trader. I've talked with him before, and we'll hear what he has to say today. So hey, man, thanks for joining. And yeah, so let's just start. So people can get to know you, where you're from, how long have you been trading, how long have you been in this space, and is how big is data part of your trading?
Sure. Well, first, I'm pretty honored to be invited on here. Yeah, I'm from San Diego, California, born and raised. I've been trading, it'll be 1 year exactly at the end of this month. And my dad actually got me into trading. He's been trading for a long time. And he'd been trying to get me into it for a while, but I don't know, for whatever reason, put it off until last year. So
around COVID, I'd say, like when COVID.
Yeah, it was. Yeah. I got let go from the job I was working at, and
oh, really?
didn't really. I was working for Procter and Gamble as their head of sales here in San Diego. And I didn't know sort of what I was going to do next. And my dad said, "Hey, man, I've been talking to you about trading for a little while." He's like, "Why don't you give it a shot?" And my dad instilled in me discipline and work ethic, my brother and I, from an early age. And he thought that that would be, those combination of factors would be really good for trading. And yeah, turned out he was right.
Yeah, that's interesting, actually. So COVID, and your dad got you to starting this. And how has been it going? Like, is it a success so far? Is it like what you hear in all of the commercials and the campaigns, or it's like very hard?
So honestly, it's definitely, I think, as all traders could, agree with me, it's definitely the hardest thing that I've ever done in my life.
Yeah.
There was definitely points in my journey so far that I didn't feel like giving up. I won't say that, but it was pretty dark periods where I just wanted to like smash my my monitors with a hammer.
Definitely. Yeah.
But I just started simple. I started with like a laptop using Thinkorswim, and from there, I realized that I wasn't very good going long. And that was also right about when I started to, I joined Twitter, and I found out that that a lot of the guys that I started following on Twitter, they were short sellers. And so I started to kind of play around with that. And I wasn't able to do that, obviously, on Thinkorswim. Like, they don't really let you short. I don't think much. There's just not many borrows. So, and at the time I was below PDT. So I joined this like offshore broker. I think it was CMEG. And it allowed me to get around the PDT rule. And so that was really where I started short selling around March of this year. With that offshore broker, and from there, yeah, just started, getting a little bit better, getting more consistent, and yeah, and then backtesting. Started backtesting maybe a few months later, just doing it manually, man. Just I would see a setup that would interest me, and I would just start taking screenshots. I think it was all day faders on Twitter. He talked a lot about.
I'm cutting you over, but like, why did suddenly you made the change to backtesting? Did it something that you notice is like was an aha moment, or it's it's like something you figured out that, okay, I need this as part of my like tools to, you know, progress as a trader.
I think, yeah, for me, as a new trader, you hear people throw the term around backtesting a lot. And honestly, like it scared the hell out of me because I didn't know where to begin, right? Like I thought you'd have to be like some genius, software coder guy to like, do backtesting. It was like really, it just was scary, right? I didn't know where to start. And I went online and there's honestly not a really good information about how to start backtesting, so that was kind of a strikeout. And then I basically just broke it down. I said, okay, if I'm going to have conviction in, any one of these like setups that I'm going to trade, like I need to know if it's profitable, number one, right? And so, for me, it just started off with, all right, like I'm going to start manually tracking these setups. So I built like a spreadsheet, and I just started screenshotting. And, I realized that, all right, number one, I just need to find out if it's profitable, right? And yeah, I started with there, man. And I realized like, look, backtesting is really pretty simple at the end of the day. So we can kind of get into that more in my slide presentation here in a bit. But yeah, I realized backtesting was pretty critical if I was gonna make it as a trader in this game.
Yeah, that makes sense. Before we get into the slide, like last question, then you can like show some of your notes. How did you tackle the data issue in the beginning of your journey? Like you said, you started, manually picking up some data points and everything. So how was that experience? And how did you do it manually?
So like, let's take, the gap down short. The day two gap down short was really, I think, my aha moment in trading. I decided that was going to be like this ticker that I was going to just laser focus on. And so I focused on the day two gap down short for like 4 months. And all I did was manually track that setup. And every single time a ticker like, freaking came up and dared come across my scanner, like I was taking a screenshot of the 1 minute to 15 minute in the daily. It was going into Evernote. And then what I would do is I would just start slowly adding more data fields in my spreadsheet as they became apparent that they were important to that setup, right? And then what I would do is I would then tweak my scanner, right? So my scanner, like literally every day, my gap down short scanner would become a little bit more refined, a little bit more refined, a little bit more refined, a little bit more refined. And so, fast forward to today, like my gap down short scanner, like if anything hits my gap down short scanner, like I know like it's a super high probability that that's going to be a sick, gap down day two gap down short, because I spent so much time like dialing in the filters there.
Yeah, that sounds good. I think you have more, you can elaborate more on that in your slides. So, why don't we jump to that and you can share your thesis on backtesting and all your tips.
Yeah. Sweet. All right. So let me just jump over to that. And Noam, just let me know when that's visible, okay?
Yeah, sure. Yeah, so Ray Mills, you asked about equities. Yeah, I think we're talking about general markets. So this is like approaching a systematic way of trading. So it applies not only on equities, I guess, but on many other markets.
All right, you guys see that?
Yeah, we can see it.
Okay, my slide deck. Cool. So yeah, guys, I Noam invited me to come on here. Just want to remind everyone, like I'm pretty new in my journey, just been trading for, like I said, about a year. So my backtesting is certainly not as advanced, probably as a lot of traders out there that have been trading for much longer than me. But for me, it's been working so far, and definitely continuing to refine it. But I definitely don't consider myself an expert. But this is what I've been doing. And I really wanted to make this webinar focused on probably the newer guys that were like me when I first started, which was super overwhelmed with backtesting and didn't even know where to begin. So I hope at the end of this presentation, you guys will have a better idea about how to get started. I'm always available to be, my DMs are always open on Twitter. Feel free to reach out to me, and then maybe Spikey can post this slide deck on the show notes on YouTube, so you guys can have a copy of this. So yeah, backtesting 101. What is the purpose of backtesting and data collection? At the end of the day, backtesting, you're wanting to see if your strategy is three things. You want to know if it's profitable, okay? You want to know if it's repeatable, and you want to know if it's predictable. So profitability for me, it's pretty simple. I'm usually looking at, if I took a trade at the open and I closed it low of day, is that going to be a profitable setup? And for me, I'm really looking for tickers that have at least a 10% or greater return on the day. Okay, a lot of guys use end of day as their metric. But for me, with the tickers that I trade, my strategies, I really prefer to measure it based on the low of the day. The second one, repeatable. You need to know, like, if the setup is going to be a setup that, is going to show up, more than, say, like once a month. That might work for some guys, but, I'm kind of a degenerate. So I want to be trading every day. That doesn't mean that every single one of my strategies is going to show up every day. But, now I've got about, I would say 3, maybe 4 back-tested working strategies. And pretty much every day, one of those setups is going to appear on my scans. So you definitely want it to be repeatable. I would say at the bare minimum, you want a strategy that's going to pop up probably a couple times a week. That's going to prevent, you from getting FOMO and taking trades that are not, in your playbook. The last one is predictable. This is one of the most important ones because, one of the purposes of backtesting here, guys, is you want to see what the commonalities are, right? So if you can't predict these stocks based on what the data is telling you, then when they pop up on your scanner, you're not going to be ready, and for your short seller, you're not going to have your borrows ready, and you're going to miss that big move, the meat of the move. You're going to be chasing it. So profitable, repeatable, predictable. Those are the 3 things I'm asking myself when I am beginning to look into a new strategy. What am I looking for? Yeah.
I just got you. So when you say,
sure.
I think not many people put attention to this, but you say like repeatable. So you're saying you want to see like X amount of occurrences during the year, right? So like 200 occurrences of your setup during the year. So do you have like a breakdown for every strategy, how many times a year or a month this happens exactly, or it's more of something like a range?
Yeah. No, I don't have that data in front of me right now, but that's something that I actually just asked from one of my trading partners, Valentine. I asked him, how often, the particular strat that we've been spending a lot of time on, we've been working on for about the past month together. I just asked him that the other day. I was like, of the last 2 years of data that we pulled for this strat, like on average, like how many times is it showing up, a month? And I think it was something like we were getting about, I want to say, it's in the ballpark of like, we were getting about a 6 to 8 really solid bangers in this strategy per month. So, you're looking on average, maybe around, two times per week. And I'm just talking about one strategy. So
yeah. So you know exactly, not exactly, but you have like a good kind of metric of what to expect every month.
Yeah.
That sounds good.
Yeah. Okay. Yeah, and then finally, before I move on here, guys, if strategy is, if it's not showing edge, then move on. If the strategy does not repeat itself, move on. If the strategy is not predictable using the data, and then filtering for that data using your scanners, then move on. And that's I've gone down a lot of dead ends, and when I don't, find something that's like clicking and fulfilling these 3 things, then I just move on. So what am I looking for? First and foremost, I want to know what these tickers have in common, right? I mean, that really needs to be like the #1 thing that you guys are focused on. Like, you guys need to consider yourself as detectives, and you need to like really always keep in mind that, you know, the sole purpose of all of this like data tracking and back testing and all these hours you're putting in, you're really looking for those clues. Okay. And so I'm always keeping in the back of my head, I'm always trying to figure out, you know, what those clues are, what those things, what those commonalities are. And really it breaks down to two parts, right? I'm looking for number data. So, you know, that's float, pre-market volume, market cap, you know, et cetera, et cetera, et cetera. It's, there's a lot of number data. And Spikey, you guys, I mean, you wouldn't believe like how many data fields and things and filters that you can pull up. They have a lot. So that's where, you know, the hours are going to go in. That's where the time's going to go in. That's where, you know, you're going to have to tinker around and find out, you know, what works for your particular strategy. And that all goes into a spreadsheet. So, you know, depending on the data package that you have from Spikey, you know, it might be Zoho, or, you know, that might go into Excel, or you can transport it to Sheets or whatever you prefer. The next one is chart data. So for me, you know, once I get all the data from Spikey, you know, I'm pulling up all those tickers one by one, historically in DOS, and looking at the chart. So for me, I'm looking at the 1 minute, I'm looking at the 15-minute, I'm looking at the daily chart, right? And those all get screenshots. So screenshots, the short, medium, long-term timeframes. And I'm looking at, you know, extra moving averages. I'm looking at support and resistance levels. I'm looking at daily levels. You know, I'm looking at VWAP boulevards. You know, and there's quite a few other ones, but those are probably the top ones. And this then all gets a screenshot, and this goes into Evernote. Each ticker for me, each strategy has its own notebook within Evernote, and then within that notebook, each one of the tickers gets its own note within that notebook. So,
I think I'll
yep,
plug in a quick question. So let's take,
sure.
for example, the number data. When you throw out this metric, pre-market volume or market cap, what's your like thought process behind of trying to find a correlation to that data point? Is that something that you took because it's like a common, you know, metric that a lot of people use, or is that something that you found by visualizing and, you know, looking at charts? You have found, okay, this is an idea, let me dig through it. Like, how do you come up with new number data points you want to, you know, go further into?
So I would say that that I want to be careful here, because a lot of my data points that I did not include here are like critical to my edge. So you know, that's and they're different for each strategy, right? I just really included general stuff here, but the ones that are key and critical to my strategies, I'm not going to share with you guys, but you know, that's part of your job as a trader, to dig in and find out. And each strategy, you guys, is going to have different number data that is, you know, really crucial to that strategy. I want to know the outlier, right? Like, I don't care like if one of the data points is like, you know, an average, right? I'm looking for like outlier data, if that makes sense. If it's like, let's say if it's a median or an average, like I want to see that, you know, 600, 700, 800, 1,000% of normal. Then I'm like, oh, wow, like this could be important to the strategy.
That makes complete sense.
Yeah.
But I think a lot of people, you know, they don't know where to start. Like, they have this data, they have this software, they have everything, but they don't know how to take a data point and drill down on that, and, you know, take the further leap on that idea. So I think
I would say that once you pull a data set, you guys, from Spikey, and then you start filtering out your columns, like you can see the ones, the tickers, you guys, that are, you know, the most profitable. And then you start to see like which column, you know, start to line up with the tickers that are most profitable, right? And it'll just start, like the clues will just start to jump off the page at you as to like what data fields, you know, are crucial to this strategy.
Yeah.
Ready for me to move on?
Yeah, I think.
Okay, cool. So next slide, guys. KISS, keep it simple, stupid. This is not rocket science. You're looking at a lot of data here, but you don't have to be a Python expert to do sound back testing. I just want to remind you guys, I don't want to come on here and spoon feed anyone. I want to show traders, especially newer ones, just starting their journey with backtesting. It's not rocket science. Anyone can and should be backtesting and forward testing their setups. My backtesting process, as you're going to see, is quite simple. And it can and should be done by anyone. It's easy to go down the rabbit hole and overcomplicate things. You can definitely overdo it. So, when I find myself maybe going down that rabbit hole sometimes, I always bring myself back to, okay, just, what is it that I'm really looking for here? Okay. And keeping it simple is, for me, that has been pretty crucial to, not getting overcomplicated with this stuff. I let the data guide me, but at the end of the day, I'm a price action based trader. I'm reading the tape and I'm a chartist. So I let the data be my guide, but I'm not making trade decisions just because a particular setup is saying you have an X win percentage if you short at the open and cover at the close. I know some guys have a lot of success with that. But that doesn't I guess work for me as a trader. I'd rather be a little bit more involved. So I'm letting the data guide me and give me conviction. But at the end of the day, as a trader, I still want to read that price action because each ticker is different. And I want to be making that final call. Keep coming back to the core question, guys, of what do these tickers have in common, right? That needs to be your, if you need to print that out and put it underneath your trade station while you're back testing, I highly suggest you do that because that really is the question that you need to be constantly asking yourself. If you're not great with data, it's okay. Start small. I certainly wasn't great with data. I'm a history major in college. I've always hated math. I don't think I ever really used a spreadsheet until I started trading. So start small. But if you do have a friend, you have a trading partner, who's good with data, team up with them. It was about a month ago, maybe 6 weeks ago, that I was invited to join a private trading room. And one of the guys in that room, his name is Valentin. He's amazing with data. He just really has an affinity for it. So him and I have really teamed up lately, and we are now working together really closely hand in hand. I come up with maybe the more macro idea about a strategy or something that I've noticed on the chart. And I'll say, hey, Valentin, can we pull up, this data point and can we see what this looks like? So if you have a friend that's good with data, definitely team up with them. And you guys can both focus on your skill sets. So next slide. It all starts with an idea for me. So, all strategies for me are starting with an idea. If I can elaborate that a little more, so, sometimes, when I'm trading, you guys, I'll see like a pattern start to take shape, several times on a particular stock. Let's go back to my day 2 gap down short. I noticed like particular patterns. I noticed like particular extra moving averages that it was respecting, right? And coming down and hitting at the end of the day. And also I noticed a particular, support and resistance that it was coming and spiking into off the open. Well, I started screenshotting that stuff. I started just screenshotting those charts. I started putting those into its own Evernote, right? And so most of my strategies, they start with that original idea. And I don't know if it's going to go anywhere, right? But I just want to get it down on paper because I don't want to forget it because it might lead into some gold later on, or it might not. It starts with manually tracking. So Trade Ideas has this really cool scan. It's called the single stock scanner. Basically, you can just pull up one ticker at a time and you can just kind of dial in that ticker. So starts with manually tracking, screenshotting, and then all of that going into an Evernote. And then finally, I build my own very simple, I use Google Sheets Excel is the same, but I build a very simple Google Sheets spreadsheet, and I begin to manually enter like the data that I know is gonna be important for this particular strategy. I've kind of got it dialed in now where I know, I have the baseline factors that I'm pretty sure are going to be important to this. But it did take me a while to get there. And it's going to take you guys a while too if you're just starting. But that's, that's part of the work as a trader that you need to put into this. Utilizing the scanner. So I talked about the single stock scanner. I always have that up. My bottom, I have 6 monitors, TradeStation. So my bottom left monitor, you guys, is devoted purely to my scanner. So I always have all my scans up. I got about 10 scans, and one of them is a single stock scanner. And I use that quite a bit during the day, and I definitely use it a ton for my back testing. That's where, I'm going to put in every stock at the end of the day and see, and kind of see what it did, tweak the filters, and look at the data points that it's giving me. The only limitation, you guys, with Trade Ideas is, you can only go back 3 months. So when you really want to dig into the data, that's where Spiky is gonna come into, gonna really prove itself to be beneficial. Okay, now let's move on to what I call the 4 horsemen. So this is just a term that I coined, just kind of, I don't know, just it's kind of hit me. Like at the end of the day, what I'm trying to find is the core things that these tickers have in common, right? So I noticed that there's top core things that these have in common, and I just coined them the 4 horsemen. So really, what the 4 horsemen, guys, is you're looking for those 4 main drivers that these tickers in this particular strategy have in common, right? There's going to be more than 4, of course. But you should be able to identify after a month or so of backtesting your strats, you should be able to come up with those 4 main commonalities that that each one of these tickers have. So now, here enters the picture of Spiky, right? After about a month of data tracking, you should have an idea if there's edge here in this strategy or not. If there's edge, if there's no edge, then scrap it and move on, right? Don't be spending time on a strategy, guys, that has like a 20% win rate, unless that's the kind of trader you are, and you want to get stopped out all the time, but you're swinging for that 10-to-1 R. That's not the type of trader that I am. So for me, I'm really looking for a strategy that has at least a 75% or greater win rate. If it does have edge, guys, this is where you need to continue to dig, you need to continue to refine, you need to continue to dig, continue to refine, because the more variables and the more filters, guys, that you can apply to your data set, the higher the win rate you're going to have, and the greater conviction that you're going to have in this particular strategy in your particular setup. Okay, I'm pulling about 2 years worth of data on Spiky. I don't know where I started or where I came up with that number. I found that, that was enough data for me. And I also think, the market's constantly changing. So I'm not necessarily sure that, data that's 5 years old or greater, maybe it's not as relevant as today's market. I don't know, maybe the algos weren't as prevalent back then. I've only been trading for a year, so I can't speak to that too accurately, but for me, yeah, I've been pulling about 2 years of data. I found you really only need about 100 good samples, but I think more is better. But for me, I feel like if I can pull 100 good samples where I've really dialed down the filters and I've really dialed down the variables, 100 samples should give me pretty good conviction in the setup. Last year is, depending on the data package you guys have from Spiky, it allow you to add more filters and more data fields. But I know that on the higher end packages from Spiky, I mean, like the sky's the limit with the number of filters and fields and things that you can add to really like dial in your strat. So for me, I think I have like the highest package. It was worth it for me to be able to pull that up. And I also like the fact that it continually updates your data your data pulls with each ticker that hits that criteria each day. So that's nice. Yeah, continuing on with Spikeheat, if you spend enough time, you guys, with the scanner in the beginning, tinkering around, when you do your first pull on Spikeheat, you should have a pretty good first baseline pull, meaning that data that you got, if you tinkered enough, using your scanner, that first pull in Spikeheat should be a pretty decent pull. Okay. The key here to really dialing down, as I kind of touched on that last slide, is you want to combine different data points and filters. And the more that you can do that, the more that when you do it, because I'm always doing more data pulls, and I'm always adding, new data points, and I'm always adding new filters, because I don't really want to have like 800 tickers, right? And half of them are good and half are shitty. So, the more I can add data points, the more I can refine the filters, then, the fewer tickers it's going to give back. But Valentin, my trading partner, and I are at the point now that, when we do a data pull, I mean, we're getting bangers. We're getting consistent bangers that, hit our strategy. And when I start going through the charts, it's pretty amazing about how spot on, our data pulls have become. Next is
there anything that
sorry, I'll go back.
Yeah, I'll go ahead. And is there anything that you felt, you said that in the past period that you found that the data pools are much more on point? Is that something that you feel like you improved as more using the platform, or it's just something that, it's recent action or recent more opportunities in the market that you're finding, okay, these stickers are really matching my setup?
I'm not sure exactly your question, but I mean, I'll take a stab at it, and you tell me, if I'm in the ballpark of what you're asking me.
Okay.
Yeah, I mean, when I first started doing the data pull, it was already pretty good, because I'd already spent, quite a few months before I even joined the Spikeheat data service. So, even when I did my first data pull using Spikeheat, I was already getting like a pretty high quality data set. But it's getting better all the time.
Yeah, no, what I meant is, like, as you dive into the, the data pooling methodology of, pulling more data sets and increasing your use of in the platform, do you feel you get better in understanding, like, okay, this is the data points I need, or you think it's something you came ahead of time because you were manually tracking, or is it something that is the platform helping you more coming up with better
Yes, yeah, big time. Yeah, big time. Yeah, because the data, you guys, that you can get on Spikeheat, I mean, Trade Ideas is great, but I mean, it doesn't even have, it doesn't come close to the amount of data fields that you can get from Spikeheat. So there were quite a number of things that I had never even considered before. Using Spikeheat that Valentina and I are now using.
Okay, great.
Yep.
I just want to understand, like, if the use of using like the platform is making you more focused on, okay, this is the data I need to pull.
100%, 100%. Yeah.
I know which data points I don't like, which are relevant, and because when you do manual
100%,
tracking,
yeah,
you're just picking up everything you see, right, at the moment.
Yeah. Yeah, and you can be biased towards particular data. So 100%, like, Spikeheat is definitely made us better when it comes to refining our filter criteria on our data tracking. 100%. Yeah.
Awesome.
Mm-hmm. Anything else you want to ask about Spikeheat in particular before I move on?
No, I guess we'll give people the chance to ask in the end.
Yeah.
But you can move on to the next slide, I guess.
Yeah, I mean, one thing. Let me just hit on this last sort of two bullet points here, guys.
Mhm, go ahead.
Your goal should be with pulling a data set. Your goal should be coming up with solid tickers, meeting your parameters, spitting out absolute bangers. Right. That's really where you want to be with your data pool. You want to get it so refined that when you start pulling these tickers up on your charts, you're just going to be like blown away about, you're just like winner after winner after winner after winner. So, yep. All right. Next slide. Chart dissection. For me, guys, like I said earlier, I'm a real price action, tape reading trader. So I really want to see, I really need to see the charts. And so after I get a really good refined data pull, what I'm doing is I'm taking every one of those tickers, you guys, and then I'm going back in DOS and I'm pulling up the 1 minute and 15 minute and the daily chart. Okay. So basically, I want to see the short, the medium, and the long time frame. Sometimes I'll also use the 60-minute chart because it shows the pre-market activity. But this is slow going. This is not quick work. Not just pulling up the chart and taking a quick screenshot and then slapping it into Evernote. Right. When I pull up these charts, that's where my real, I would say, my real like sleuthing, my real detective work goes into play. I'm looking at the chart and I want to see like, why did it stuff into this particular point, right? Why did it find the support here, right? Why did it consolidate in this area? Right. And if you look left, as Nate McCoud, talks about a lot, and a lot of other top traders, if you look left, you can find a lot of those answers. And so for me, I can spend upwards of maybe 30 minutes on each particular ticker that I get from my data pool, because I'm not just taking a screenshot. Like it's not just wham bam and throw it into Evernote. I really want to see like what's the reason that this ticker did what it did, at these particular levels. I'm really trying to find that out. Yeah, chart dissection. It's slow going, but for me, this is really where I think the magic happens and really where like the aha moments come up. And that's gonna lead me into my next slide.
Yeah, that's a great point, and just wanted to add something that we've talked about before as well. So a lot of people ask us this every day. They generate this spreadsheet, then they want to have, like 100 or 1,000 charts of that particular day with the ticker that they just pulled. So this is something we're working on, and you'll be able to basically visualize all of your data set into charts. So once you pull a certain spreadsheet and you have this ticker and the date, you'll be able to pull up the daily or the intraday chart of that specific ticker, and then you can tinker around with like the time frame. So you want to see the previous day, or you want to see like view up or moving averages on top of that, or of course custom indicators you've pulled. So that's something that we hear a lot, basically after having the spreadsheet, seeing the different charts instead of going to a different platform and then manually inputting into Thinkorswim 1,000 times, inputting a ticker. That's not ideal. So stay tuned. We want to launch it next year, depending on other stuff we have in the queue. But yeah, definitely we know about this, and we think we have a good solution for that.
Yeah, and I think that would be a killer add-on. I think that'd be a really good feature. So so that's chart dissection. Super critical to what I do. And let me just add one more thing. It's looking through all of these charts, right, and spending all of this time looking at these, back these tickers, and looking at the short and the medium, the long time frame. It really starts to like hammer you guys and drill in like that muscle memory into your brain. And when you then start to see these tickers start to trade and you're trading them live, like you know, and a lot of times on these low floats, you know, this shit's happening quickly, right? As we all know. I mean, you know, like price action, it's jumping all over the place, especially near the open. You know, when you've looked at so many charts, you know, that really helps with kind of settling your nerves, calming you down, and looking at that bigger picture and not getting shaken out, you know, from your good initial entry. All right, let's move on to the next slide. So yeah, this is what I call the Eureka Effect. So at this stage, you guys, you know, having done your initial idea, moving that onto tinkering with your scanner settings, okay, putting that into an initial spreadsheet, doing your screenshots, building an Evernote, right, and then pulling a data set from SpikeHeat, okay. After about a month, guys, all right, this is where the clues, right, should really start to jump off the screen, okay. That happens for me when I'm going through the spreadsheet on SpikeHeat, and it also happens, you guys, when I'm looking at the charts. Okay, I get those eureka, those aha moments. All right, from looking at spreadsheet data that Valentine helps me out with, as well as looking at the charts when I'm alone. You know, so this is a really fun stage, guys, and it really lets you like know that you're on to something awesome. And this is really where you guys should be getting excited and really start to even, you know, refine your filters more in SpikeHeat. You know, you really want to try to, you know, even dial in further, you know, what these tickers have in common and how you can avoid, you know, taking, you know, just average trades and really just taking trades on, you know, the absolute bangers. Lastly, you know, you want to keep tracking these setups every single week, right? Just because you back tested a setup for, say, you know, 3 months and you feel like you have it dialed in, right? Don't stop, right? Like keep every single ticker, you guys, that hits my setup every single day. Like I'm taking a screenshot of the 1 minute, 15 minute and the daily, and it's going into my Evernote in its proper notebook, right? So I'm continually tracking my setups, you know, and I plan on doing that probably, I don't know, for a long time. Next on the slide, guys, is you know, dialing in the scanner. Okay, after you've done all of your back testing, right? The next step really is how can I go and how can I predict these? So it goes back to the early part of my my slide presentation here, which is, you know, what do I want to know about the strategy? Well, I want to know if it's profitable. Well, you should have figured out if it's profitable by now, or otherwise you probably wouldn't be at this stage. Okay. 2, is it repeatable? Okay. You should also know if it's repeatable. How many times is this happening a month or a week, right? And 3, and this is where this slide comes into play here, guys, is you want to know if this is predictable. Okay. And predictability is where the scanner is going to come into play. All right. So this is super important. You want to use your data from your SpikeHeat data pool, okay? And you want to go back and you want to dial in a custom scan in your scanner, right? So I'm constantly refining my scanners and trade ideas. Like I would say probably several times a week, I'm tinkering and tweaking my filters. And this is tough because you don't want to filter out too much data so that, you know, you're missing good setups, but you also don't want to have, you know, you don't want to have too little data that you're like your scanner and you look in the morning, it's got like, you know, 20 gap down short possibilities on day 2. You know, then you're going to have so many tickers that it's going to kind of overwhelm you and it's going to drown out the A+ setups. So for me, I really know when I've dialed in my scan, my scans, when it's giving me, you know, like 2, 3, 4 at the most tickers in my strategy each day. And at the end of the day, what I do, you guys, is I go back and I'll pull up the ticker for each one of the tickers that showed up on each one of my scans within my strategies to see how it performed. Even if I didn't trade it, I want to know why that ticker showed up on that particular scanner and what it ended up doing, even if I didn't trade it. I like to use the median percentage numbers of the textbook setups for my filter settings in my scans. An example of that is tickers that return to 10% intraday or greater. So let me dive into that a little bit more. So as I said earlier, I'm really looking for tickers that have a profit return from the open level. Okay, this is how I measure it, from open level to low of day. Not end of day, which a lot of guys use. I use low of day. All right. So I only really want to pay attention to tickers that have a 10% or a greater move from open level to low of day. Okay. Once I filtered those out, all right, that's what I call my textbook setup, or my textbook tickers within that setup. Once I have that filtered out, okay, giving me just the textbook tickers, then I want to take the median data, right? So let's go back to the 4 horsemen. Those are the most critical data points for me. I want to take the median data, okay, the median percentage data from those 4 horsemen data points, and then I want to transport that over to my scanner in the new scanner filter that I've built now for this new setup. I use color coding to help me spot the A+ setups as they pop up on my scanner. So I'm not going to share my scanner because it's pretty critical to my edge, but you know, it's filled with all sorts of different colors. And those colors aren't really going to mean anything to you guys, but for me in the morning, you know, especially here on the West Coast, sure, all the other West Coast traders that are listening right now, you'll know, you know, I'm up at usually 4:30 in the morning, starting to build my watch list. You know, I'm still real tired, you know, even after I've had coffee. So, you know, having color coded filters really helps, you know, those A+ setups pop up off my scanner. Keep tweaking your guys' scan settings, bro, for the next several months. Because your goal here is you want it to spit out consistent bangers, consistent winners for you. Keep tracking, guys. Keep tracking the setup. You know, I mentioned this earlier, so it's kind of redundant, but every time a ticker matches my strategy, regardless if I traded or not, the 115 and daily chart gets screenshots, and so does the scan. So I like to take a screenshot of my scanner, and this all goes into its own Evernote. The premium version, guys, of Spiky is great because it gives you the daily updates. You know, it's continually updating your spreadsheet. But I still need to pull up the charts. And lastly, you know, this is how I build out, refine, and gain confidence in new strategy. You know, and this is what I consider edge. In summary, guys, backtesting 101. You know, the purpose of backtesting is to prove if a system is 1, profitable, 2, repeatable, and 3, predictable. You know, I want to know, is there edge here or is there not? You know, if there's no edge, move on. If there's edge, keep digging. You know, should I put capital at risk? And none of us should be putting capital at risk if we haven't backtested that strategy yet. Spiky has made backtesting and data collection super easy. You know, the data is right at your fingertips. You know, backtesting gives you real conviction to take the trade when it presents itself. And finally, always be asking yourself, what are the 4 horsemen of this setup? If you can find the 4 horsemen, you guys, if you can find the 4 horsemen, you have found true edge in the market. And that's it.
Yeah, I really like that. I think the best summary for this is you know, profitable, repeatable, and predictable. It's a good summary, but again, if you have to break it down to a lot of parts where you have to first find something that occurs, you don't want something that happens 1 or 2 times a year. You have to find something that you can reliably predict. And of course, you want to find something that when you enter and exit, you make money. And again, you didn't throw the entire secret sauce for people, but I think, you know, people should find which data points are crucial for them and then look into that idea more. So yeah, I really like that summary. And I think, you know, we'll add that slide note to the
Cool.
video once we upload it. And you know, people can, if you guys have any questions now, you can ask us in the Q&A or in the chat, we'll try to answer. Let's go back a bit. Someone asked, the spiky provide market cap on date of the ticker latest market cap. So yeah, this is one of our greatest capabilities. Basically, all of our data is point in time. So every data point you pull, the market cap, the close, the the earnings, the fundamentals, the technical, everything is point in time. So it's true for that specific day that that you're pulling data for. It's a historical screener basically. So whenever you pull a market cap, yeah, it's giving you the exact data at that time. And the way we do this is we basically have all fundamental data and it updates every day, every second actually. So you get data directly from the outstanding shares. And if companies had offerings or splits, we take that in consideration as well, and we give you like the most reliable piece of data. Unsure if it will provide a snapshot. Okay, so yeah, you answered them. Let's see. Anya asked, what is the name of the trading room? Just curious. I'm not sure if you want to share.
Yeah, that's fine. It's called Phantom Chat on Discord. Right now it's a private room. There's just, I think, 6 of us. So.
Okay.
Yeah.
Yeah. And are you open to get more people, or kind of closed room?
Yeah. No, it's not a closed room. We just added two guys this week. One of the guys that trades in our room, you had as your first guest, Karan Khanna. So he's in our room, and we're looking to add more guys. Basically, we're looking to add guys that have something to offer our room. We don't want newbies or beginners. We want to really bring on guys that that have been trading and have conviction in their setups and can offer the room
Bring something to the table. Yeah. Yeah. Okay.
And I'll add also too, we're all short biased. So.
Okay. So I guess they can message you if they want to join or something in Twitter, right?
Yeah. So you could send me a direct message if you're interested in joining our room for sure. Yeah.
Okay. Donald Joy, why do we offer download on the quant yearly? We've answered this many times before. Has to do with data licensing restrictions. Do you guys have Christmas deals? We don't really throw Christmas deals or promotions to our platform, and the reason is we consider our product a high quality product, so we know it's not for everyone. We don't want discount codes or promotions. So that's it. I guess another thing to add is we're continuously adding more features, so we'll probably raise our prices next year sometime, but I'm not sure at the exact moment. Let's say you have found an edge and a good winning percentage. You backtested it and played it live price action and now have a high conviction. Are you now risk on for these A+? Are you seeing these questions from AWC trades?
Yeah, I just pulled up the comments right now. You want me to answer them?
I think it's
verbally.
Yeah, I think just go over it and you can.
Okay, I'll go through. Okay, so I'll go through the questions and I'll answer the ones that I feel like I can add value. Okay. So this guy asked, "Are we talking equities?" Yes.
Yeah, we're talking. But you can jump to 1240. The 1240 question. AWC trades asked something. Okay. It's kind of a long question.
All right, so let's say you found an edge and good win percentage play. You've back tested it and played it live in price action and now have high conviction. Are you now risk on for these A+ plays above a standard setup you play? And if so, how much are you increasing your risk percentage by compared to a B setup, let's say? I don't really, I was doing that for a little while. Like I was, I would have like a certain X stop out percentage above my entry. But now I don't do that. And now I don't rely on like stop outs based on like X percent above my entry. Even though that is profitable and you can do that. And I was doing that for a while. Let's go back to my gap down short day 2 strategy. I got it pretty dialed in, like what an entry, what a win percentage would be from an entry, say X percent above the open and a stop out above that. But I don't do that anymore now. Just kind of depends on that particular ticker. But on the A+ setups, yeah, I mean, I'm going to have a lot higher conviction and I'm going to size into those a lot bigger. So I hope that answers the question, AWC.
Yeah, we're having here a lot of questions. Let's see. The recording, yeah, it will be posted probably on YouTube again, guys. Joel asked a lot of questions. Justin, does the setup your backtesting lose an edge in certain markets? This is a good question, actually. And then get it back. Do you look for when it gets the edge back? So basically, if it loses an edge and if it gets back, and if you take a look at it at all.
Yeah, one thing I've noticed, and I'll talk about that gap to the day 2 gap down, just because we've been talking about it. I noticed in the past month or so, there's been quite a number of serious spikers. Not necessarily like right off the open, which I like, but more like I don't know, like 30 minutes into the open. ISIG recently was a good example of that. Definitely going a lot higher than like all the back testing and the data had shown me in the past. So that was something that we had to adjust for. And we haven't been seeing as many good gap down, day 2 gap down short plays. I don't really have the reason for that yet as to why, but I don't really care so much. I'm really just relying on what's hitting my scans in the morning. So if a good day 2 gap down short pops up on my scans, and all of my green color coding is like all green lit. I've got about 6 data boxes on my trade idea scanner. Like if all of those are fucking green lit, like I'm like, dude, yeah, like let's go. Right. And if it doesn't show up, then I'm not necessarily wondering like, why is it not showing up? I'm not going to trade gap down shorts that day. I'm going to trade gap up shorts, right? Or I'm going to focus on, things that are running that day, late day fades. I trade, I'll trade 5 setups. Recently started getting some success with, low volume parabolic pumps midday. Those are kind of tough to backtest, so don't really have much backtesting data on that, but it's more of a feel. And then really using the daily chart on those, and then of course reading the tape. And then day 2 gap down shorts, day 2 gap up shorts, and then late day fades. Those are my setups. So if one's not showing up on my scans that morning, then I'll focus on the other ones that are. So that's another good reason, you guys, to have couple good setups in your playbook, because it prevents you from getting FOMO and prevents you from taking subpar plays. So
yeah, the spiky detect daily resistance, and how do you detect it? A VWAP pivots. I'm not sure if I get what you mean here. If you want, you can ask it again, but we have an option to pull indicators in the indicator section. We have an option to pull like when big days happened and resistance and all of that, but we don't really, if I'm understanding what you're saying, I think resistance is looking at the chart and picking that up and spinning you that in the spreadsheet, Joel. But again, I'm not really sure what you mean, like overhead resistance on the daily. Yeah, so that's actually a good question. You can pull that, but again, it's not something necessarily. It's more mathematical than looking at a chart. So what do I mean by that? If you want to take the past 2 years and you want to pull the highest bar in that past 2 years, you can do that definitely in our platform. It's under the indicator section. You just request, I want the highest volume day, or I want the highest high price of the day in the past 2 years, and you will get that. Glad it makes sense. If I wish to track gap and crap day one setups, is this something I can extract from Spygate after I have found the fundamentals I wish to research, such as dilution, cache, and other stuff, to see what these tickers have in common? Yeah, you can definitely pull gap and crap. Again, you have to define what that means. The platform doesn't understand words, so you have to say at gap X% and then it like fell or dipped. But everything you want to pull, you have to first define into specific data points, and then you can apply it. And you can definitely pull some of the metrics you include here, such as dilution, cache. We have all of that under the earnings sections. So we have a lot of earnings data. We basically take all the earnings from the SEC, more than 250 million data points we have, and then we can give you the fundamental data that's right point in time. So that correlates to what I said on the market cap. You will get the cash of the company, and you will get the dilution that it had point in time, not as of today. Let's see. And again, let us know if you want to wrap this up, but we're getting some more questions here. What is your process for defining stops, especially when you're not one-shotting? How are you keeping risk in check?
What is my process for refining my stops?
For defining them, like how do you
Defining my stops?
measure where you enter, where you exit?
Yeah, that's a good question, but I don't feel like that question can be answered, generally. I mean, it depends on the strategy, number one. It depends on, your entry. So that question is not definable based on, just a simple yes, no question. I mean, we'd have to look at the particular chart, and you could ask me, why or where my stop was on this particular entry. We could take ADGI, which is just the absolute textbook day two gap up short. That one was pretty easy on my risk. I was basically risking a high of day, pre-market high of day, maybe plus 25 cents or so. So, I don't know if we have time, but, if some guys want me to get in a particular chart, maybe it's something I posted on Twitter, something I traded, and, maybe pick my brain about, where I was thinking about, or why I got in here, or what resistance levels, or how I use Spygate, for that. I'm happy to maybe do that. But is there any other questions? I haven't gone through them all. Noam,
yeah,
that you think I should answer?
I'm hopping over. I see something in the Q&A. What moving averages are important for you to look at? I think you've mentioned before the exponential moving average is something important for you in the 1 minute and the 50.
Yeah, I don't use MAs at all. I'm a small cap short seller, guys. So I'm not saying that simple moving averages don't have validity. But for me and the backtesting that I've done, the exponential moving average is they're king for me. So I don't think I don't think we can pull those right now on Spygate, but it's something I think you said you were working on.
Moving averages you can, exponential you can't. Yeah, exactly. So exponential are like they're more weighted. So yeah, you can do that now, but definitely something we have in the queue as well. Do you want to review some chart here, because I'm seeing a lot of examples, or we're short on time here, because I can continue here.
Yeah. Well, I mean, continue maybe with the other easy questions that I can answer, like a yes or no, or and then if you want me to jump on the chart or two, I can do that.
Sure. I'm not seeing any other. Let's see. Let's scroll back a bit. Wiki Analog says there's no secret sauce. You have to work hard. I agree.
I would 100% agree with that. Yeah, 100%. Like, I think that's part of the reason why, I think a lot of guys keep their strategies and their data and stuff, you guys, close to their chests, because I can only speak for myself personally. I'm sure it's true for every other trader that started to see a bit of success, is that I've like poured my blood, sweat, and tears into this, and I don't mean that I don't mean that figuratively, right? Like I truly have devoted the last year of my life completely to this game, and it's become a full obsession. So I know that I feel like if you guys want to get it, if you guys want to make it, you're gonna have to do the same, and there's no ways around it.
Agree. Everything in life is hard.
Yep.
Who is the person talking? I'm Noam. I created this, this platform. I think I've said it in the beginning. Are you guys considering to add tickers, sectors, and float size? Also, thank you for this webinar. Yes, definitely. Sector is important for us and for our many users. We're going to add that. We have it already, actually. It's just a matter of mapping the data. Float is a very, very common request. And I'll answer like we always answer. Float is not a well-defined metric that we have out there. It's a lot of guessing, a lot of misinformation. It's not accurate. So we're probably not going to add it until we can have a very valid source that we can stand behind, because all of our data is like top-notch quality. We stand behind every data point, and until we can, there's no point in adding inaccurate float. We rather not have it, just to say we have float. So we have outstanding shares. We found that if you take the outstanding shares, you multiply it by like 80 or 90%, you get the float over a large number of statistically. So you take 1,000 or 100, you get 100 cases, you'll get over those cases, you'll get a relative figure. But again, this is not something we're gonna add until we have a very valid, high quality source. Can you describe your journey finding setups or backtesting popular setups? I think he did it mostly in the webinar.
Yep. There was a question here. I'll answer real quick. Noam, what moving averages are important to you, or do you look at? Yeah, I mean, you can look at my Twitter charts, guys. But I would say the tickers, the moving averages that I have on my charts differ. But I always have J lines, so 7289 EMAs. And I always have the 1 minute 500, the 1 minute 500, the 5 minute 500, and the 15 minute 500 on every single one of my charts. If a stock is trending and it's it's on trend, it's starting to run, I'll add the 20 EMA and the 50 EMA. So those are real critical, the 15 to 20, to say my parabolic moves and my late day fades.
The spiky provide IO data. Again, guys, it's exactly like float. Once we have a very valid data source, we're working on institutional ownership and float and short float. But we have to process the 13 Fs and all of that. So again, we have to make sure it's in the works, but we have to make sure we have a really valid data source. We don't want to offer anything that's not accurate, or at least no data set is 100% accurate, but we want to make sure we have the source. We don't go through third parties. May I ask what your average RR per trade is? I always try.
I just answered. I don't use R, guys.
Okay. So wait, how do you measure your trades before? It's just dollar figure?
Mm-hmm. Yep.
Okay.
I mean, I have a set, I have a base amount that I'm willing to risk per trade. But I mean, I'm not thinking about like, it's not so static with me, right? I'm not going to cut a trade simply because like it's like above 1R, right? Like at the end of the day, you know, maybe I'm sized in too heavy and I'm a little bit over where I'd like to be. But I mean, if it's coming up and it's going to stuff, you know, into a key level, like I'm going to hold that trade. Good example was, you know, ADGI guys. ADGI, you know, if you looked at that chart, you know, I was sized in pretty heavy after, you know, we had to break down through VWAP. You know, but you know, if you paid attention and you use volume by price on your charts, which I recommend everyone does, you'll notice that basically all of the volume was trading between that like 1520 level, or sorry, 1550 level and like 14 level, right? So when that stock came up and started slamming into that area, you know, I was going to take that trade all day long. So I mean, R is important. Some guys like to use that, but for me, I'm still going to trade the price action. Sometimes I'll get a little bit too heavy, but I'm not going to take a trade off if it's, you know, exceeding my R.
Okay. Looks like there aren't any questions.
Yeah, I think that guys, if anyone wants me to do chart review, because this interview is kind of going over a time that we allotted for it, I'm happy to do that and jam with more people. But I think I want to cut it off here to make the interview strictly about Spiky and how you know, I was using the Spiky data to help me with my trade decisions and kind of a backtesting 101. So I kind of feel like you know, any chart review at this point is kind of going above the original scope of the conversation. So I'm happy to do that. And maybe you guys want to hit me up on Twitter and I can set up a Discord room and we can jam on chart review for I don't know, half hour or so.
Yeah, I agree. And we can have, you know, again in the future, if people want to see more, you know, chart analysis or that kind of stuff, you know, we're totally into it. So yeah, I guess, you know, appreciate you being on. I know I learned some cool things. It was very informative. I guess 2 quick notes for people here. First is, you know, if you're a developer, we have like a new API that we're rolling now. So if you want to like check it out, if you want to be a beta tester of the API, basically using everything we have in the web, you can, if you're a coder, you can just use it, you know, as a programmer. So hit us up on that if you want to check out our new API. It's very, you know, powerful and will let you like pull requests without having to do it in the web. And the second thing, you know, if you're thinking about joining our platform, we'll probably raise our prices next year. So make sure to like a subscription now, so you're grandfathered with the current price. And that's it, guys. Appreciate you being here. Thanks, Justin, for coming on. And I'll post this webinar to our YouTube channel.